Hey guys, hey everyone, for joining this session. As was introduced, my name is Andrei. I'm co-founder and managing partner of DWF and DWF Labs. And today's session, I would like to spend this 15 minutes to show my and our vision, how the market looks like now, and what is going on behind these charts on the exchanges, and what the following trends are, and how people behave behind these candles and charts on exchanges, right? I prefer to do things with kind of simple manner and funny. I like memes, as you can see, because I'm pretty sure that the worst things in the world, they was done with quite serious intentions and with quite serious face. And to be professional is to be understandable for everyone, right? It's not to be too complicated. And let's go. Let's start with the thing that's why people love the crypto market. In general, people join the crypto market since 2017 and 2021. I mean, large crowds of people, because it is a chance to them to get rich very quick. And people love this volatility, people love everything which is related to this, that they can gamble, they can go short, they can go long, they can trade 24/7, doesn't matter which time zone they are based, etc., etc. It's borderless, it's easy to trade, it's easy to make money, it's easy to lose money. That's why people love it. And when the market is bullish, a lot of people are coming for that. It was in 2017 and then it was in 2021. But after that, it was changed. And this how the market looks like now, right? Because nothing happens, I would say, in general. Bitcoin is very close to stablecoin in terms of volatility, right? And some altcoins same. Altcoins behind like certain coin market cap rank are illiquid, and there is no spot volumes, no liquidity, and the situations looks like this for those who remember these times to the winter of 2019, when Bitcoin price was like approximately 2.5K, no trading volume, and I remember the time when the whole Huobi Global had approximately 15 million trading volume a day. It was completely nothing. Now it is not that extremely, but in general, today I checked the spot volume, it is 24 billion, including all these fake exchanges, fake volumes, etc., which is completely nothing. It makes people frustrated, and compared to bullish market, they don't see opportunities. A lot of people, they see risks. And if 2 slides before you saw that you could get rich quick, with current markets, people see that they could kind of get poor very quick, right? And to be kind of like this dude at this chart, poor very fast, right? I suspect that he opened, I don't know, a long position or on BTC when it was like 30 with 100x leverage, and then it's gone, right? He needs to serve us in this McDonald's at MBS. It is not only about retailers, right? If we compare with institutional activity in the market is also decreasing. And the funds, I mean native crypto funds, they are also not so active now. If you compare how, let's say, a startup could fundraise on 2021, it was super easy to fundraise like millions, right? Just for a week or for 2 weeks. Now it is complicated, and activity is kind of that less projects went to goes to exchanges, less IO, less launchpads, less high volatility, and because of this situation, no entry points, right? And if you remember this bull market, it's always ended by kind of crash. A lot of people are suffering because of losses. They have impermanent loss or permanent loss, right? But they're in red numbers, and they're looking how to improve the situation, how to find a way to get money back. And it creates the current situation, what we could see right now. This is kind of liquidity wars, right? Because retailers and institutional, not HFT, not algo traders, not market makers, I mean institutional funds who go long, who go short, the directional traders, right? No, not toxic order flow, I would say. Their activity is less. And now HFTs and market makers, they compete with each other. What that means, right? We're HFTs as well. We're in the market since 2018. We trade everywhere, every product, every coin. Like, despite its spot, futures, options, doesn't matter, we trade everything, right? And when market was bullish, we could make like several basic points from traded volume, right? Let's say we traded like some billions, right? Several basic points, this is profit, right? Because you have a lot of participants in the market who did wrong kind of trades, right? But now the situation looks like this, that these guys are not active, but another market makers, they need to provide liquidity, they need to provide trading, and because they're professional players of this space, right? And the situation looks like this, that top ones, they compete with not top ones, and not top ones, they are slowly bleeding and leave the market. And we could see it's on liquidity on exchanges, that it's decreasing. Plus some decisions which were done by SAC, a lot of market makers from the US, they made a step back, and they are kind of stopping serving projects, and it also affects the market because they were huge, and they are huge, right? But now they could do some kind of only prop trades, and it also affects the market, right? And the whole market, because of this situation, is getting smaller. But because of what was explained, right, we could see that people still need to trade. But because of the market is getting small, everything is being concentrated across and around like top coins. I would say that it's mostly, of course, top 100, but not all of them. And this is some altcoins which are, by some reason, nicely traded by people. I know people love to trade it. People love to trade it. Market makers and HFTs also love to trade it. It creates like liquidity. It creates volatility. It creates volume. And this concentration also affects the market, because if you could see behind this, let's say I would say like 200 to 300 coins from the market, the rest is dead. I could provide some example without the coin name, of course, but compared to the last year, exactly last year when we got started our kind of customer-oriented part of the business, not prop trading, we could trade some coins, or I don't know, buy or sell some coins for like 1 million a day or 2 million a day without any price impact, and it was easy. Now the same coins, it could be bought or sold from the market for 30K, and it would move the price for 10%. That's about the market. It's not only about buying power, but also about selling power, right? Which is also important. People don't want to buy something for 10K and pump it to 10%, right? It's not that great, especially when this is small altcoins, right? But it creates kind of fragileness, right? As I said, now you could buy some coin because of the lack of liquidity, or sell some coin. It pushes the price up, down, and it creates volatility, but it creates kind of not confident behavior of traders, right? But at the same time, for some coins, it creates opportunities. You could see the previous examples on the market, right? I will not stress these points, right? But it was like billions trading volume on futures. It was like billions trading volume on spot. And usually you could see that these coins are usually listed on Binance or another largest exchanges. They have future market and they have spot market. Why it is like this? Because spot is not active. It is kind of dead. And there is no volatility. It's hard for people to make money, right? And to gamble. People want to make money, but if Bitcoin, I don't know, moves like for like 2% a day, nobody is interested to trade. I mean, nobody in terms of retail and not professional investors to trade this market. You could go to Forex and trade, I don't know, some fiat currencies, right, with the same volatility. Then people go to the future market, use like 20, 50x leverage. Of course, a lot of them lose money, but by psychology, by like kind of historical experience of financial markets, especially from Forex, those who lose money is the best client of an exchange because he would try to make money again and again. Who made money, like come to exchange, made money, they're usually leaving because they're successful. They don't need to win the market. And it creates these opportunities, right? You see coins, it's volatile, it's going up because something going up, people trying to jump to this because people want to make money in order to cover their losses. And newcomers are also coming to this. People try to monetize volatility and the whole liquidity that we have on the market, the whole market activity is being concentrated on the particular coin. It creates this, I would say, abnormal situations like we could see it when open interest is larger than market capitalization, when small coins with, let's say, 50 million market cap have tens of billions trading volumes. But it's nice. People love it because it's kind of a sign and it reminds them like how it could be when the market is great. And yeah, I have less than 3 minutes and it is not prediction. It is just my thoughts, right? How we see the market and what we are trying to explore for ourselves. That's every trading strategy, every trading company should have some vision and so should have something to trade like right now, right? We do usually HFT. We don't care about the prices, right? We just trade. It's quantitative trading, but also we are looking to new startups, new products, right? And kind of promising coins that you could have like directional position in order to leverage the current market situation. And from my point of view, the good opportunity is tokens with spot or derivatives market and low market cap because of clear situation, right? People want to gamble, people will do it. It's not clear, not really correct to think that someone to do something behind it. It's just crowd. If you take a look at some psychology books, like I'm a big fan of Gustav Le Bon, The Crowd, this legendary book. You could see that when a lot of people are doing something together, their skills and their kind of knowledge is going to less and less, and this is common people's behavior, right? Then tokens without derivatives with the spot and great spot volumes, because when it's listed on derivatives, now the market thinks that it's a bullish sign and market goes to trade it. Tokens with large decentralized exchange volumes, because it's clear, if it's traded on decentralized exchange, especially on Ethereum one, people should pay a lot of fees. And it is a real retail interest, and exchanges highly likely will list it. And random. Nobody knows the future, right? Nobody. And something could happen just because it happens. And regarding macro trends, of course, we also need to be kind of oriented to the future. And from my point of view, that's market trends for the following maybe 1, maybe 2 years. I also don't know future. It's just my humble opinion. It is at Kero Labs, because it is about scalability. It is AI, because AI is the trend, right? We will see good examples in our industry soon. Telegram bots. Why Telegram bots? Because it's easy. Everyone uses it. I don't know the quality of this technology, right? How it would work, but it has a lot of people, a lot of retailers. It should work. Digital identity, of course, because we are moving to the Web3 world, and it should work nicely. Decentralized derivatives and order booked access. Order booked access should provide tax level experience. Decentralized derivatives important because a lot of exchanges are trying to implement KYC, but some people who are crypto native, they want to trade without it. Meme coins, because this is a culture. You can not cancel the culture. People love it because meme coins is the pure alpha, right? Nobody cheat you that he will do something. It's just you buy or you sell. You just believe. And option market. Options is complicated. It's not about decentralized options. It's about option market itself. Because if you take a look at traditional market, options are kind of 30 to 40% of the whole derivatives volume. On crypto, it is still 2 to 3%. The potential upside is huge. And when bull market, nobody knows, but we could only believe, right, and try to do more right decisions, right, than wrong decisions. It's easy to say, but hard to execute. That's why, please, do your own research. It was not a financial advice, and don't trust anyone, right? Just trust your opinion, because you're the only one responsible for your funds, your income, your money. Thank you so much.